Looks like we've got kind of majority of people on, so we get going with this. So good afternoon, everybody. Welcome to a virtual edition of Entrepreneurs Club, social distancing edition or lockdown edition, however it is that you want to talk about it. But obviously very strange times which has hit us over the past few weeks and months. John Davies from John Davies Accountants, Victoria Brown from High Performance Consultancy, and myself, Alex Barnes from AJ Barnes Financial Planning. We had a discussion a couple of weeks ago because obviously any of you who are familiar with our work, we've worked together on Entrepreneurs Club, physical face-to-face for a number of months and over the last year. So this is a sharing resources, bit of a Q&A session which we put together over the last couple of weeks. Bit of housekeeping I'll just deal with. So we're all a little bit new to Zoom, probably not as new as we were 3 or 4 weeks ago. It seems like now I just bounce from Zoom to Zoom. But a bit of housekeeping. Obviously you can see us, we can't see you. So if there's any audio problems or video problems, feel free to click on the chat button and that'll open up and you can put that to all panelists. We'll be able to see that. Obviously this is a live Q&A session as well. So on the bottom panel, depending on whether you're on a PC, laptop, tablet or your phone, there should be a panel which has on there a Q&A button. So we've got a list of questions that we've been asked by people over the last couple of weeks. But if there's specifically something that you would like answering that we've not got to, or you'd like us to get to, feel free to click on the Q&A button, ask that, and I'll be managing that sort of inbox as we go through. And we are recording the session as well, so hopefully we'll have that to share a little bit later on. So without further ado, I'm going to pass over to our chair, which is Victoria from HBC. So Victoria, over to you.
Good afternoon, everybody. Great for us all to get together, as Alex said, whilst it being virtual, at least it is unprecedented time, so it's good for us to be able to talk, bounce ideas and share good practice with one another. I think it's fantastic, this panel today, because we've obviously got HR, finance, investments, lots of questions have come through that I'm quite intrigued about as well, so I'm looking forward to hearing the answers. So what I'm going to do is start off with the questions that have been asked from in advance of the session, but as Alex said, please, as whilst we talk, if you think of something, please put something on the Q&A and we will try our best to answer as much as we can within the hour. So first of all, I'm going to move over to you, John, and ask the question that a lot of people seem to be asking right now is, can you furlough yourself as a director?
I was thinking that was an HR question, Victoria, but I think it's it is quite a common one we're being asked by particularly kind of owner directors of limited companies. At its simplest, yes, you can. However, if you are furloughed as a director, to an extent the rules are the same as if you furloughed an employee, in that you shouldn't be doing any work for the company. The guidelines say that you shouldn't be doing any work to generate revenue or provide services to the business. Now, as a director, it's quite hard to do that if you're the owner as well. So the kind of the additional rule for a director is that they are allowed to undertake their statutory responsibilities of the business as well as while they're on furlough. So that would include things like, I suppose, HMRC filings, Companies House filings, and what have you. At the moment, the guidance only goes as far as that. I think, you know, what certainly I'd hope, I don't know what your view is, Victoria, is that there's got to be a little bit of common sense in that as a director of a company, it is quite hard just to absolutely switch off apart from those bits. Even if you have, think about some of our clients who have a restaurant or a shop would be a good example, who are shut. They might not be doing the day-to-day work, but it makes sense for them to be doing some kind of groundwork when we reopen again, whether that's, you know, marketing or what have you. Now, at the moment, you can't do that while you're furloughing, which to me seems nonsensical really as a director. But that's where we are right now. So as the sole director of a limited company, it is possible, but it's quite hard to genuinely do it unless you really have absolutely downed tools. Let's say so that's kind of where at the moment. The other thing as well is generally as the owner director of a limited company, you're probably on a minimal salary anyway. Tax efficient salary is like £700 a month. So getting 80% of that is, don't get me wrong, is well worth having, but it's not a million miles more. It's some of our clients have looked at it, it's only like £100 or more a month than if they were actually to claim universal credit. And some of that difference of actually, for the sake of £100, you as well not furloughing and be able to do work, and that's a balancing act for people to look at. I don't know if, Victoria, you have anything to add on that as the furlough expert?
Well, I was just going to ask you a question, John, what your thoughts are around, but one of my concerns is if directors do, say, furlough themselves and then they do continue to be quite active, what do you think HMRC are going to be like in terms of checking up on people sort of once they've made? I've been told that sort of the payments are going to be made, and then 3 to 4 months time we're going to start getting some inspections around where actually people furloughed.
Yeah, I mean, my personal view is that, if you furloughed as a director, if you furloughed, you've got to really be not working. Really, it has got to be those statutory duties, because as a director, you are visible to the outside world. The people who look after our kind of fee protection insurance over if there are investigations by HMRC have been quite active in the last kind of week or so about whether that would be covered in investigations, because they're there for seeing a lot of HMRC investigations after this to see who has abused the retention scheme, and whether that's for directors or employees who they've tried to backdate to get more money. So they're definitely foreseeing a lot of investigations by HMRC after this.
That's interesting. And that does lead me on to another question that is related, which was posed around furlough and I suppose what you can do, which John, you've already answered most of that, of what sort of, not only director but as an employee, what you can and can't do. And as you quite rightly say, you can't be seen to make a profit or make any money for the business, but you can volunteer and you can also do training. The one thing to consider with training is obviously that national minimum wage query. So if somebody's on sort of like national minimum wage and they complete training, then you would have to top up. I think I'm right in saying, John, aren't I, that you would have to top up sort of their pay to ensure that they don't go below national minimum wage during that period of time. I've been on a few panels and questions have been asked of me when people are furloughed. Obviously the challenge is that communication during that period of time as well. And there has been that fear of, well, what can I or can't I do? Can I speak to my employees? And the answer is absolutely yes. I think it's very important for sort of team morale to still engage your employees. So if it is, we have sort of like a pub quiz on a Friday, if I had team members furloughed, then I would still give them the opportunity to attend that. That by all means people can still partake in sort of team meetings. I think as long as you're not instructing them to work but you're keeping that person updated, then that's not an issue. But obviously they have to do that on a voluntary perspective. You can't force somebody to attend a meeting during the time that they're furloughed. But I think it's very important that we do consider that 3 months is a long period of time for somebody to be out of the business, so you do really need to think about how you can keep some level of engagement with those individuals. So moving on, so let's move on, bring you in, Alex. So one of the questions that we've got here for you is, somebody has asked you, they have seen their pension value decrease in the last months and they're worried. Should they be looking at switching funds?
Yeah, it's a big question that we get in at the moment. So in the practice, we work with clients and new investors over this period. Quite a frequent question. I think that it kind of plays into something that we refer to quite a lot, which is loss aversion in behavioural science. So the emotional attachment to gains or losses. It's proven that sort of a loss is seen almost twice as negative as a gain is seen as positive in the other direction. One thing I'd say is that volatility is nothing new. Whilst this is a brand new situation to us, volatility in itself isn't. But what I would say is that getting close with a financial advisor, their financial advisor, checking the strategy, understanding the position is going to be vital. So, why? Because your financial advisor really should understand what your plan is. So from point A to point B, and they should be sort of navigating your particular fund to keep that on track. So quite individual. Sometimes yes, sometimes no, but actually a lot of the time, as long as you're working towards a long-term goal and not trying to speculate on the market, sometimes sitting on your hands is not the worst thing to do.
Okay, thanks, Alex. I'm just going to stay with you for a minute, Alex, just whilst we talk about sort of finances. And somebody's asked the question of how does this compare, in your opinion, financially with the last financial crash of 2008?
It's very different because the last crash of 2008 was a systemic crash. There was essentially a big problem within the system, which took quite a long time to figure out where it was and what was going on, and Lehman failure and bank failure. So essentially there's something within the system which was causing the problem. So technically this is more event driven. So this is an external event coming into the market and causing a lot of emotional sentiment and loss. So there's an argument to say that it's closer akin to sort of a 9/11 type event, but it's really not because of the size and scale of things. So I think that time will tell how this pans out in comparison, and where we are at the minute, because ultimately we're in the eye of the storm at the moment in terms of what's going on. And we've seen some pretty strong positive gains, and we've seen some pretty strong negative losses over the past few weeks. So how it compares, I can actually share my screen and try and show you something here. So I'll show you this slide here. So if everybody can see that, what this shows is it shows you a FTSE All-Share sort of discrete return funds. If you go back to sort of 2009, 2008, you can see the flip in sentiment there. Over the course of a year, it went from a 30% loss one year to a 30% gain the year after. But the intra-year declines for each year. 2008, the lowest point of the market was 40%. The lowest point of the market was 21%. So huge flips in sentiment. But you can go back all the way to 1986 and you can see these intra-year declines. You can see sort of red and blue across there. How does it compare? Ultimately, time will tell, because we're not sure where we are at the minute in the marketplace. But the big thing that we see is that sometimes people try to time the market. Is this the bottom? Is it the top? Is it a good time to go in, a bad time to go in? So for us, we like to focus on the principles of long-term investing and making sure that that's kind of sound first. That kind of answers that a little bit potentially.
Yeah, great. Thank you, Alex. And just looking at some of the live questions that are coming through, again, sort of going back, again, I think we'll go back to furlough quite a bit during this session, but there is a question come through. There is more than one director at their business. Should we furlough one director and just leave the MD as the only one left to run the business? If I take that question, then my answer would be yes, absolutely, you could do that, given what we've described in terms of what you can and can't do whilst an employee is furloughed. But just one thing to bear in mind is obviously consider the way in which they're paid and the cap on the furlough. So obviously at 80% it is capped to 2,500 plus your NI and tax. So if there is sort of a gap, you need to ensure that you've got obviously that if you're not going to top it up, you need to have that mutual agreement.
Can I just add to that as well, Victoria, because we've had, as well as the Q&A, there's also a chat function. I'm not sure whether we can see the chat function. But yeah. Mike and Mel have asked two sort of furloughy questions as well, so we might as well sort of answer those. Don't know whether this will be relevant, but Mike's asked, can a furloughed employee check with HMRC how much the employer has claimed for the employee? So that being point one, do either of you know?
John, are you aware of what HMRC...
It hasn't been made actually clear, because it has occurred to me, this one, that you'd want to make sure that the employer's not playing a game somewhere, but there's nothing actually in the guidance as of yet. But I think the other thing is that no one's in the portal yet. So as an employer, and this might actually cover the other question just below about how does it, or in the chat about how does it work, is it technically a loan from the government? Well, no, it's not. It is the government will pay the salary of your employees who are furloughed. That is capped at 80% of their salary, and generally that would be set on their February salary if they're a salaried person. But they the way you actually claim that back as an employer, and it's causing a bit of a cash flow problem for some people, is that if on a monthly payroll, for example, probably paid last week, the end of March, and will pay again at the end of April for furloughed employees, but the Reclaim portal, which HMRC are going to use for you to actually get your money, doesn't open till May. And I think until we've actually seen the portal, we're not precisely sure how it's going to work. They've kind of listed some of the information you will give, but therefore it's not clear to answer the question there of whether actually an employee can actually log in or have a look and check what was actually claimed by the employer. I guess as an employee overall, you should get 80% of your salary unless your employer has decided to top that up to higher amounts, which is kind of is optional for the employer.
Okay.
I think just also to add to that, if you're not aware, is obviously that the employee has to have been on your payroll from the, as of the 28th of February. So I've had some questions along the way of people that maybe have been recruited after that date. Unfortunately, they will not be allowed to be furloughed and will be paid back by the government. So that's something to bear in mind. I do have one other question just around furlough, which is about if you rehire somebody. So there's been a lot of questions that I've found around this, where people have obviously, say, about to leave your organisation or have left your organisation, and then their job has either fell through or their next employer is just unable to obviously sort of recruit them at this moment in time, because for all the reasons that we know, they're unable to train, unable to sort of bring them into the office. This was a little bit unclear for some time, but the government have been very, they have provided clarity now, which was great at the weekend. So you can rehire somebody and furlough them. So it is a good way to obviously sort of support everybody, particularly from a moral perspective. You would be able to backdate effectively the employee's end date. One thing I would make you aware of, though, that I don't think is very clear at the moment, is that we suspect that obviously their annual leave will still accrue. Again, it's not particularly clear within the guidance, but there's nothing to make us believe that that would be any different. So you do need to bear in mind and factor that into your considerations. It's not something that you have to do. You don't have to re-engage and backdate that furlough, but obviously, it's an option for you and it's worth you considering. Okay. So again, let's move on. I'll come back to you, John. Let's move over to rates. So can I get the rates grant if I pay the rates to my landlord?
Well, funny for me, the rates grant is one of the quickest actually routes to cash right now. In that, for anyone who's on it who's not aware what this one is, if you're claiming small business rates relief, you're eligible for a cash grant of £10,000 from the government. If you're in the retail, hospitality and leisure industry, and your rateable value is less than £15,000, you get a £10,000 grant. If it's between £15,000 and £51,000, you get a £25,000 grant, payable in April. And actually you get one for each premises as well. So it can add up to extent cover the rent and the other costs that you have. And the forms went live last week to claim these online, and we have clients who already got theirs in the bank account. So it is pure cash flow. It's been one of the best ones. Now, on the guidance, to an extent, is based on, are you paying rates and do you have a rateable value of your property of these amounts? And therefore, if you're paying to the landlord, you're not eligible. However, what we're actually finding, the councils, and this is, we have clients around the country, so it covers a few we've come up with, are being quite pragmatic about this, and to an extent, I guess, quite generous about it, because they're certainly. Somebody spoke to one of our clients on the phone, kind of said, well, actually, it's not our money. We've been given it by central government to give out, and therefore we're keen to give it out. So we have examples of, I can think of one where the business isn't actually down as a business property, and therefore isn't actually registered for business rates, and their council has agreed they'll get the grant. To be fair, it's got a shop front, so a photo is pretty clear. They're not making this up. We have one who only opens their business in February and wasn't registered yet. The council has said they'll get one. And we do have at least one where it is a case of they're in a effectively serviced office building where they don't pay the rates directly. And again, a phone call to the council has been told, well, okay, then we'll have a look at that and hopefully they will get one. So I guess what I'd say is it's worth, if you look up your property, and you can look at its evaluation office's website. I can't remember the actual web address, but it's a valuation office. I think it's voa.gov.uk or something. You can look up the rateable value of your premises. If you're not the rates payer, it's worth a phone call to the council, because we're seeing people actually get positive results from that, even though the strict words, the legislation are, you need to be the rate payer.
Okay, thank you, John. We've got another question that's come through as well, just asking, where do you get these forms for the rates?
Okay, if you are basically the site, so if you're in Liverpool, Sefton or Knowsley, absolutely definitely they're in the council's website. In a second, when perhaps one of you two is answering a question, I'll put them in the chat room, because I'll sent them around in an email the other day to some of our clients. So I'll actually pop them in the chat room in a second. Might be easiest than that. So I've got Liverpool, Knowsley, Sefton and Wirral, I think, are the ones I've kind of got to hand. Otherwise, if you just go onto your local authority's website and have a look. Like I say, the local ones certainly went live, I think, the 30th, 31st of March, about a week ago.
Okay, great. And John, whilst I've still got you sort of on the point around rates, there was a question that was around the coronavirus loan scheme. So how can you borrow through this, and can you use it to grow your business?
It's I mean, the loan scheme was set up, I guess, in the headline figures that the Chancellor spoke about 2 weeks ago. It's all gone so quick, hasn't it? 2 or 3 weeks ago now, when they were talking about £330 billion. A big chunk of it was actually guaranteeing loans. It wasn't actually cash. So the £10,000 grants is actually cash given to you. The loans are indeed loans. On the loan scheme, it went live about 2 weeks ago. There were a lot of problems with it. Certainly the figures the other day were out of 190,000 applicants, and you get 1,000 people who got a loan so far. The Chancellor did step in at the end of last week to try and make things a bit easier. Now, in terms of what it's there for, the idea is that the government will guarantee the loan to help people who wouldn't get the loan normally get it. It's still on you to actually pay the thing back, but to help, the government will pay the interest for the first year. It should be used, though, to actually bridge the gap that you have because of coronavirus, not for other stuff. And what we're seeing is with the banks, and having had a long chat with a couple of bank managers who are kind of administering this, is that to an extent, if you would have got a loan anyway, you'll get offered their normal loan. It's only if you wouldn't have, do you move to the coronavirus one. And in terms of what they'll lend, it should be really just enough to kind of get you through. Now, that does lead to, when you have to put a cash flow together, as they're asking, is actually looking to, I guess, tell the story that gets you kind of what you want or need. But as an example, a bank manager actually rang me last week actually asking about directors' furloughs, because they will only lend money to cover a director's salary, not dividends, because they're literally looking at what are your costs, what have they been. If your income falls off a cliff for a few months, what do you need to bridge that gap? The coronavirus loan scheme shouldn't be used for, I can't remember what's the phrase you use, but kind of to grow the business, Victoria, do you say, as in right, the stuff you might normally lend for? It is to bridge the cash gap over the next kind of 3, 6, 12 months.
Okay. Thank you, John. Right, back to you, Alex. So I think this is a question that everyone would like to know. Is now a good time to buy Tesco and Sainsbury's shares?
Well, I think it's what everybody would first jump to, because if you've gone to any of the shops like I have, and John and I were talking about the social distancing at shops, which has been sporadic, you would think, God, all of this stuff that's being bought, surely the share price is going to rocket. What I would say is that buying individual shares more falls into the category of speculating than true what we deal with investing. So it's not really my forte, but sort of my common sense approach that I've used over the past decade is usually, if you have heard that it's a good idea to buy those individual shares, it's probably too late already. If you think about investors funding billions of pounds into the market, looking at analysis and teams of analysts looking at sort of profitability of companies and so on and so forth, they're usually looking at what to do before markets realise. So if it's filtered down to us through sort of chat or whatever else, probably too late. But it's quite a high risk strategy as well. So buying individual shares like that, I would say, depending on what your outlook is, can be quite high risk. So again, take advice on it and look at the guys.
Okay, thank you, Alex. Another question for you from the attendees is now a good time to invest?
Well, yeah, it would seem so. What we always try and do is try and sort of look at, the adage for us is it's not timing the market, but time in the market. So if I sort of break that down a little bit more fully for you, essentially what we're trying to say is that the buying signals that sometimes we get as, oh, it's a low market or it's a high market, sometimes are a bit of a falsity, really, once you start looking at a long-term plan. So if I show you sort of another graph, I've got sort of graph heavy content here, so I'm going to be sharing a bit so just my face isn't shown. This kind of shows you what we mean by timing, not timing the market, if I don't say it properly. It shows you sort of what the I think it's the FTSE All Share Index has been like for £100,000 if you invested over 20 years. The bar furthest left is if you'd have just remained fully invested over that period. You would have come out with 256,939, which sounds great. But actually, it's 156% gain, which is great. But if you just miss the best 10 days in that 20-year period, all of a sudden, your return drops quite drastically to 39,000, so 39% gain. And then if you miss the best 20 days, you're now starting to look at a loss. 30 days, you're compounding that loss. 40 days, you're compounding that loss further. So, well, why is that? Why is it important, I suppose? Because we're trying to catch sort of such sharp flips in sentiment requires not only great foresight, but quite a strong stomach at the same point. So it's very easy to do investing in hindsight. So it's very easy for us to go back to 2009, somewhere around February, March, and find the bottom and say, oh, well, if we'd only invested at that point. But how many people were truly investing at that point and going the opposite way when a lot of people were thinking, how far is this going to go? So trying to time the best year, the best point, the worst year, the worst point, usually isn't something that we sort of focus on. It's usually for us just sort of, what are we aiming to invest for? Are we investing for a long term? By that I mean 5, 10, 15, 20 plus years. And then creating a bespoke plan for our clients as to what their sort of goals are orientated to. But as you can see, sometimes sort of flipping around in markets and trying to take buying signals and selling signals, sometimes you can end up getting your fingers burnt.
Great, thank you, Alex. I'm going to move on to a couple of questions that we've had around holidays. So I've had a question that's asked around so this is not for somebody that's furloughed, this is just, obviously most people with lockdown are working from home. So a question has come through about an employee, and if they ask to cancel their pre-booked holidays, can you refuse the request? Now, this will obviously depend on what you have written in your contracts of employment or your handbook. But if there's nothing in there that suggests that you can't do, then you can absolutely refuse that request. As we mentioned earlier, one of the concerns that we do have is that we will all go back to work, say, hopefully in June, and we'll have a real backlog of holidays. So I do have some clients that are trying to manage that in a fair way now. because obviously a lot of people that are trying to cancel their leave, it's because maybe their holidays have been cancelled, so they don't want to take those 2 weeks off during the Easter period, and they would like to look to be able to move that holiday to later on in the year. So a lot of clients have had a look at this and just tried to be quite fair, open and transparent, and maybe looked at, is there ways that they could manage that leave during this period of time, and just have that that open conversation with your employees as well. Because whilst we are on lockdown, a lot of us do have childcare responsibilities and trying to juggle the two at the moment. So you may find that your employees may actually welcome that opportunity to be able to take just that a little bit of leave during this period. On the flip side of that, I've also been asked the question about, I suppose, if you're working in an industry sector where actually you can't really afford for people to be off right now because you really need them. I felt like that a couple of weeks ago, because we've obviously, as you can imagine, been inundated with questions around furlough. Are you able to cancel an employee's leave if they have already got leave in place and agreed and approved by you? And the answer to that would be yes, but you have to provide them with the notice needs to be double of what the period of time is. So say, for example, they had 2 days leave booked, then you would have to give them 4 days notice of the basically the removal of that approved leave and that cancellation. So just again, just sticking to holidays, I have a question that's come through, John, that I wanted to pose to you. It's if you've got a member of staff that is furloughed and booked holidays, do they still take it, and can you still claim for the furloughed employee?
In terms of whether they still take it, I guess I might there's the hospital pass there, Vic, that might throw back to you in a second. In terms of claiming, I guess to an extent, the furloughed employee is treated as normal in terms of cash, so they be paid the salary. Whether you as an employer are paying 80% of decide top up, but you'll pay the salary and claim the 80% back. Either way, what they're doing on that time, whether they have taken a holiday or whatever, and I guess with these bank holidays this weekend, it seems to have passed most of us by, that it's happening. But in pure cash, it won't make any difference whether or not a furloughed employee still takes the holiday. I'll admit that bit I don't know. I don't know whether you can add anything, Victoria, on that one.
Yeah, it's for me still very grey area, and there's not been, I had hoped for more clarity at the weekend from the government, and there hasn't been. So we remain unsure right now, because obviously, as you know, if somebody is off sick during that furlough period of time, they effectively then become sick rather than furloughed, and you take that SSP or that enhanced payment if necessary. And there are some sort of queries around maternity leave as well. So in short, similar to yourself, I'm not sure right now. I'm a little bit unclear around the payment as well. Again, they've not really clarified what that looks like. And I know, John, we spoke about this prior to us going live, that a lot of people are asking us these questions around the bank holidays. Do we have to top up during furlough? So I think it's very much going to have to be watch this space, and as soon as we get some more clarity, we'll obviously be able to confirm with you what people need to do. But I have got clients that have got furloughed staff, and they they have taken that holiday leave, and it may be that we've got to sort of revisit that if the guidance suggests that we can't do that. But we have got time to do that ultimately, haven't we, before we make the claim, so we should be okay.
Yeah.
Guys, I've got a live question which has come in while we're on the subject of furlough. So we've got one here from Welton Media, which just says, there is more than one director at our business. Should we furlough one director and just leave the MD as the only one left to run the business? So what's your thoughts on that?
We've mentioned that one before, Alex. Obviously, you were not paying attention at that moment in time, so we've already answered that one.
Answered that one. Okay.
Clearly, you're enjoying us talking about furlough, aren't you, Alex?
I'm sorry. I mean, it's all this furlough chat, isn't it? It makes you dizzy, doesn't it?
I know. I know, so many questions. Well, let's come back to you, Alex, because I feel like you're feeling a bit left out here. And let's go through. So another question for you is that there is somebody, an attendee that has is supposed to be retiring this year, and they want to know, should they put their retirement back?
I think it would depend largely on what their assets look like and what they wanted the retirement to look like. So I appreciate that's sort of a bit of an open question and a bit of an open answer. So what can they do? Things that they can do: get close to the financial advisor. If they don't have a financial advisor, I think that one would certainly benefit, particularly if you're coming up to pretty much the biggest holiday that you're ever going to take, potentially, that kind of decision. Because this year it's going to be a roller coaster for anybody on the cusp of making that decision. Cash flow modelling is quite big in my practice. So cash flow modelling is essentially trying to take all of the data points about assets and income and plans and expenditure, and then creating that into almost like a neat and tidy reporting system where we can say, based on this probability, we'll be able to afford that, or what if happens? We can sort of play about with the concept of retirement, but remaining flexible is definitely going to be applicable for this year, because one of the biggest questions that we get a lot of the time, and our fund managers seem to get, because we're on sort of daily webinars with the fund managers, is, have we seen the bottom of the market yet? So has the market bottomed out? And really the answer is potentially it has, potentially it hasn't, but probably what's going to happen is that for the next certainly for a couple of months, that volatility is going to be there. So it depends where retirement sits in the timeline over the next sort of, if it's in the next month, if it's in the next 12 months, and how much sort of they can potentially recoup. Because if we're talking about investment assets, so pensions, ISAs, that are all sort of investment backed, unless they're in some pretty remarkable funds, we're seeing sort of quite sharp dips at some points over the past sort of 6 to 8 weeks. So certainly putting their foot on the ball and sort of being able to work out what does that mean as far as their overall plan, because actually, depending on where they're invested and what their overall goals are, it could not impact hardly at all. But again, it could be quite wildly the other way, and it could severely impact, and it would not be a wise move to start dipping into assets at this point, particularly if you take a market fall and then you start eating into your capital, you almost compound the effect of a market loss. It's very much sort of like, I was speaking to a neighbour the other day, and they said, well, they're quite a way away from retirement, and I think that their adage was, it's almost like your house value at some point. So if somebody comes up and values your house, said, oh, you made £20,000 on your house, you think, well, that's nice. It doesn't really impact me because I'm not selling my house right now. Likewise, if I've lost £20,000, it doesn't really impact me because I'm not selling my house right now. But if you are selling your house, or if you are retiring, to sort of complete the adage, then yes, it's probably quite important what's going on within the markets at the minute. So information is key. Information and knowledge is key. So get tighter with your financial advisor, I'd say, to that person, and let them review your circumstances. So for our practice at the minute, even though majority of what we do is face to face, and we drink people's tea in their front rooms and they drink our tea when they come to our office, this kind of technology has proved quite invaluable, because particularly in that sort of last 12 months, 18 months before you make the big jump, normal conditions, you will have a wobble probably a couple of times before you actually do it. So this market and everything going on, and this how weird the environment is, you'll probably experience more wobbles. So a good financial advisor should be right there next to you to be able to help you navigate it, really.
Okay. That's really, really useful. And one of the other questions that was posed to you was exactly that, really. How do you engage in contact with your financial advisor? But you've just answered it, and I suppose we're doing it right now. We do have an attendee that is live now that is asked the question for us all. So Alex, I'll pose this to you first. They've asked, does the panel think the lockdown will end sooner and the return to work quicker, now that the Chancellor has realised the furlough scheme could cost £40 billion?
I don't know whether there is sarcasm in there at the end, but I like it. for sure. That last little bit about costing the Chancellor money, yeah. I mean, for me, I'm completely ready to be in lockdown for further. I can't see how we're going to come out of this with, we've not got testing anywhere near where we need it to be. It's not like we're going to open the doors and the economy is just going to open up tomorrow and everybody will go back to their offices and carry on as normal. I think that whatever world that we go back into work in, it's going to be very different than what it is now. So if that involves a longer period of social distancing or sort of spattered lockdowns or these COVID-19 passports they were talking about, I think that element is the bit that's missing. So I was reading an article the other day about, it feels like very much the first few weeks were just sort of people panicking about what was going to happen and being distraught that the pubs were shut. And then now it's sort of, we're now looking at the light of coming around that bend of how are we going to do that? Are we going to follow a similar model to South Korea, or are we going to take a completely different tact? So for me, I'll be completely expecting that the lockdown is going to continue. I just think that with Boris's illness happening this week and Dominic Raab sort of having to go to the cabinet for decisions, it's probably the reason, for me anyway, my personal opinion is why perhaps it's not been announced yet.
Yeah. John, have you got anything to add?
No, I guess the furlough scheme itself is to cover 3 months. The self-employed support scheme is to cover 3 months as well. So I guess they're in the money discussed, they're looking at covering 3 months. So, and I mean, we've got businesses. I mean, as an example, I guess the shops and restaurants, or the non-vital shops and restaurants might be closed, theoretically can turn on a tap slightly quicker than some others. I mean, there'll be mechanics of reopening, but see, on the assumption if lockdown was lifted, we do whatever we wanted, one of the first thing you do is go to the pub and the restaurant and what have you. But we have other industries, other clients who would take quite a lot longer to recover off the back of it. So if it actually does last for 3 months, really that they would at least need to look at some support after that for further furlough. So I guess that there is a financial pressure on the government at some point, but I think right now, I think we're going to be in this situation for the foreseeable future.
No, I absolutely agree. And one of the questions that's come up sort of live, and a question that a lot of people seem to be quite frustrated about, is going back to sort of when we talked about directors before, and potentially not really great idea to furlough if you're a sole director, and the challenges that you have as a sole director, because obviously you sort of got, as you mentioned before, John, you probably are paid quite a small amount through PAYE, and then if your sort of profits are over, I think you'll tell me in a minute, 50,000, then you're not sort of eligible for anything. So a couple of questions have come in to say, what is there anything, or are these people sort of falling within the cracks? What are there any other options for these sort of sole directors?
Yeah, I think that the people who've particularly fallen between the cracks are those owner directors of small businesses who don't have a premises. I mean, we have a number of businesses who may work from home, advisors, consultants, or what have you, where the business are very much dried up at the moment. Contracts are being cancelled. There's nothing to do, but there's no actual direct support for them, other than at best furloughing themselves and getting 80% of a £700 salary because there's nothing to cover the dividends. So they are very much the people who have fallen between the cracks, and I think that's our worry for a number of clients as well, is that if you have the premises, the grant is, I mean, don't get me wrong, it doesn't necessarily cover the money you might have made, but it's very helpful. It eases things through. If you have employees, you can furlough. Well, that's very useful that the government will kind of fund that. Similarly, if you are a sole trader and were self-employed and earning less than £50,000, again, you get 80% of your profits covered for 3 months. A limited company director, really, there's nothing there for them. And I think to an extent what's happened, and the self-employed, when you allude to the £50,000, is because it's all been done very quickly and nobody's expecting this, they're quite blunt instruments. So if you earn £49,999 in your self-assessment, you'll get £2,500 a month. If you earn £50,000 in your self-assessment, you get nothing. Rather than have some kind of thing where it's taken away bit by bit. It'd be like child benefit actually works, where if you earn 50,000, 49,999, you get full child benefit. 60,000, you get nothing in between. It's kind of scales so that you don't drop off a cliff edge. And I think because it's been done on the hoof, there are definitely people who've fallen between the gaps. And I mean, I don't know the figures. I've seen lots of figures banded around, but certainly when the self-employed scheme was announced, there was a lot of talk of actually out of 5 million people who may be self-employed, 1 million at least were kind of missed out. And that's before you got to the limited company directors who aren't officially self-employed. Even though they might think of themselves self-employed, mortgage lenders would refer to them as self-employed, HMRC don't, and there's just nothing for them. So I think that absolutely, definitely, it is a big issue that a lot of people are, like I say, caught between the cracks at the moment.
Yeah. Okay, great. No, thank you, John. There is another question that came through, which was just about a sole trader. So are we right in thinking that they should sit tight and wait for the HMRC's letter to come through to sort of let them know how they're going to get paid?
Yes. And it's quite... It's frustrating in a way, I guess, because you want to see something in writing that tells you precisely how much you've got. But HMRC are quite clear they don't want you contacting them for the moment because they're trying to process, a few million of these. And to an extent, they have the details. It's in your tax return. They're simply doing a sum on that to work it out. They will then contact you probably in May to then find out, because they need some bank details to pay it to. But for the moment, they're quite adamant, please do not contact them, because it will slow them down doing their work. And I understand that's frustrating, because we all want clarity and to know definitively what we are getting. My advice sitting here now would be, if you haven't, unless something else is issued between now and then, if you haven't heard anything by, say, the 1st of May, at that point I might be thinking perhaps it's worth getting in touch. But for now, that's a definitive guidance from HSC. Please do not ring. You will slow them down.
Yeah. Okay. Great. Thank you very much, John. A question that came through slightly different was just around sort of team morale and productivity. It's a question that we're now finding, once people have made the decisions, who's working from home, who's being furloughed, then now is the question, particularly if you're not used to home working, of how do I ensure that my team remain engaged? How do I check sort of productivity levels? So from my experience and what clients are doing, that there are a lot of clients who are working really hard to ensure good communication. I mean, personally, as a business owner, I think our communication has been the best it's ever been, because we're sort of using the likes of Teams, we're using Zoom, we're having sort of regular team meetings. We would normally have sort of a weekly team meeting. We're having daily sort of check-ins with everybody, and we're using the sort of online tools to help us. We're doing a lot around sort of recognition still as well. So if somebody's doing something really good, we're making sure that they're still getting that recognition and doing a little bit of a shout out and allocation of stars during this period of time. And again, a lot of clients are doing something together. So whether it be virtual bingo or a pub quiz or something where they can sort of all get together, maybe on a Friday afternoon, and sort of have that level of engagement, which is really, really important for you. It's also really important to ensure that people are quite clear on the vision and the goals still of the business, albeit they may have changed slightly. People still need to understand, and people are fearful, they are nervous about what the future looks like for them. Not to mention they are, some people are in isolation, some people are not great with sort of working from home, and they're used to having that balance and that interaction with their team members. So I think as business owners, which the majority of people on this call are, we do have that responsibility to try and ensure that our we keep that team morale as high as we possibly can during this difficult period. I would also note that we are having quite a lot of clients who are having some challenges with sort of productivity, shall we say, and the behaviour of some of their employees during this period of time. And you can still use your policies, and that's what they're there for. That's what your handbooks are there for. If people aren't being productive, or you do think that they're sort of probably, one for a better word, skiving during the day, then we have been going through our processes as we would normally do. So please don't fear and think that you don't have to do anything for 3 months, because you absolutely can. Just to get an idea from you, I mean, Alex, what have you been doing? Is there anything sort of different that you've been doing to try and sort of, even with clients or team members, how you're keeping that morale high?
Yeah, it's actually a little bit more of the same what you said, really. So I think at first you know, day one, when it all sort of happened and you can't go in work anymore, and you think, well, how will this impact? I think we were talking about it sort of the week before, because it was kind of that rumbling, wasn't there, for a week of this is probably going to come in and things. So we started talking about it then. And so we started looking at the security of files and people working from home, and the viability of getting the files that we needed work in progress doing on and things like that. But actually, once we kind of figured out that initial part, one thing that I would say that's come out of this is just how much time I've got now to randomly pick up the phone and speak to a client, or set up a Zoom conference with a client and be there with them, because ultimately my job, I refer to it as a contact sport, so when things are going wrong or right, you should be there for your clients. So this is just actually, it's given me perhaps a different outlook on running the business, where I'm perhaps now I've got more availability to do that, and picking up the phone and speaking to the guys in the office now that not in the office, but how's your day going, and what are you doing, and have you been out in the garden and things like that. And I don't know, if anything, it's actually the community that I'm involved in. It's probably made it a little bit tighter, just because you've got a bit more time to spend with them, instead of spending 2 hours on the M6 in traffic or something like that. So just planning on doing more of the same kind of thing, really, that type of thing.
Yeah. No, absolutely. No, that makes perfect sense. I totally agree. I think I know more about my team and some of my clients than I've ever known. You sort of see children and animals, don't you, sort of in the background of everyone. John, what are you doing over at John Davies Accountants?
Yeah, I mean, I guess similar, really. I mean, for us, we have a daily team meeting, 9 o'clock every morning, which, as in when we're in the office, which is a quick one. Everyone just basically says what to do yesterday, what am I going to do today, and is there anything that you want to share or need help on. We're doing that by using Teams, as in Microsoft Teams. We've used Zoom for a few years, actually, for kind of client stuff. Teams we're using internally. The meeting goes on longer because there's the chat that you might not, that normally you'd have had around it, but that's a good thing. We have, because we're using Teams for that, we're also using Teams for the chat function for kind of quick work queries around everyone. And we have a WhatsApp group, which is the more, pictures of pets sitting on your computer or your baby or whatever type of thing. And just the social chit chat is probably in a WhatsApp group we've got. I think, working remotely for us, everyone was set up to work remotely anyway. Everyone's got laptops. And the Wednesday before the lockdown, we sent everyone home with the screens, keyboards and everything. So that's when we started working from home as a group. Everyone individually has done it before. We haven't all done it before. So yeah, that keeping in touch is important. And I think, as Alex alludes to, I think one of the things, we found important and I think is really important is that communication with the kind of clients. So the client managers here had a task of, and I'll get caught out when someone will pipe up in a second on here and said, you didn't ring me, but theoretically they rang certainly 95% of our clients. In an order, actually, it was the retail hospitality ones probably were first, or travel, and then kind of going through, and just keeping in touch with the clients as well. Because ultimately, it's about looking after them now. And even for some of our customers, our advice to them when they're about their clients, who, even if they're stopped for the moment, is actually, it's about relationships, so that when we are through this, you need to keep that relationship going. And talking now is just a great thing to do, and people will hopefully remember that you're helpful now, so that when we're all back and working again they'll kind of stick with you, because that's really important.
Yeah, that's crucial, isn't it? I think that's something we have to consider at this moment in time is that we do want to retain our talent within our business. So how we behave and how we sort of treat our staff now will be judged upon it, won't we, in the future? So it's important we do the right thing now as best we can. I'm just
sorry, yeah, I was just going to say the same thing, just conscious of time, and we've got 12 questions, so should we do like a quick fire, try and get through a few of them, and then...
Well, to be honest, Alex, I'm just wondering whether we're going to be able to get through them. I mean, I absolutely think if we don't get through them all, we can certainly just send out, I'm more than happy to sort of anything that I can do, we'll send out sort of answers.
Okay. Maybe
some of the shorter ones that we'll ask the answer for. So, okay. So somebody's asked here about, should you keep marketing your business and services over the lockdown period so that people don't forget about what you do? You don't want to lose that important relationship. From my perspective, absolutely, you know, we're kind of probably marketing more than we've ever marketed right now, but I think it's really, really important to, and I noticed a lot of people are, and I've also found that you know, we're using more platforms, aren't we? So I'm spending a lot more time on LinkedIn than I normally would, on Twitter. So I am taking note and looking at maybe got more awareness than I have had before of other people's services.
Absolutely, definitely say as well. And people have more time to read your stuff and watch your stuff right now as well.
Yeah.
So absolutely, definitely on that one.
One to you, John, which was just from earlier, is that you implied a business may be eligible for a grant even if they don't have a premises. After applying for the grant, a bank statement is required. What if you currently have a healthy bank balance due to being a responsible business owner, but cash flow moving forward because contracts are cancelled due to the coronavirus? How likely is it that the grant will be awarded?
Yeah, I guess firstly, you must have a premises. The point I was making earlier is that you don't. We have a few people who have found they don't have to be the people who directly pay the rates to the council. They do have a premises, i.e. they're not cheating as such on that thing. However, your bank balance and how much money you've got is irrelevant. It is a grant there for people who are, you know, to help them out during this. And you're right, you have to, the second bit of the form is you have to attach a bank statement that is there so they actually know to prove that they are paying to the correct bank account and the correct person, because of course the council don't have your bank details right now. It's not about checking your, you know, how kind of solvent you are and making a decision over that. It should be a kind of a black and white thing. You're eligible or you're not.
Okay, great. Well, I think that's sort of, I'm going to hand it back to you now, Alex. Obviously we're out of time, but there are still some questions pending, so we absolutely will come back to you and respond to your answer to everybody today. So back to you, Alex. Oh, you're muted, Alex.
Sorry. Yeah, thank you very much for technologically not gifted at the end. Thanks everybody for attending. I've just made a quick note there. I've just done a copy and paste of all of those questions that we're yet to get to. I've got a full attendee list as well. So what we'll do after this is we'll send an email out to you, potentially with some material in there or some answers to those questions individually. If there is anything that John, myself, or Victoria can do to support or to help, then feel free to reach out and get in touch with us. And we do realise that we're in this together through this period, and if there's anything that we can do to guide or help in our position, then we're more than happy to. So without further ado, I will, John and Victoria, if we stay on for a little bit longer, because I'll just have to do a couple of bits of admin around this, but everybody else feel free to log off, and we'll, yeah, thank you very much.
Thanks, guys.
Thank you.
Guys. So I'll just wait for everybody to log off. The numbers are going down.
Superb.
Yeah, and then I'll create a report. What time am I now? I'll create a report now, actually, just the people that attended and list. I'll stop the recording now as